Are you thinking about ways that you can save and invest into your child's future to make that money grow in order to set them up so that they can have a financial head start? You are in the right place. In this video, I will explain how you can do exactly that. Hi, if you're new, welcome. My name is Karen. I am a wife, qualified chartered accountant, and entrepreneur based in the UK. I am on a financial freedom journey and I'm passionate about helping you with weekly videos that cover tips and strategies on personal finance and wealth creation. Feel free to have a look at some of my other useful videos. An ISA is an individual saving account, which is a tax wrapper to allow you to earn interest, dividends, or capital gains from investments tax-free. For individuals above the age of 18, you have an allowance of £20,000 in the 2020 to 2021 tax year. So that means from the 6th of April 2020 to the 5th of April 2021, you can save or invest up to £20,000 in an ISA, and whatever you earn from that is tax-free. If you don't already have an ISA, I highly encourage you to look into this. You can also watch the video linked above and in the description for a good explanation of the different ISAs. And in that video, I go into more detail on the stocks and shares investment ISA. Click the like button if you already have savings of your own. Now that you've dealt with your own investments, you want to consider saving and investing for your children. So let's talk about the Junior ISA, which is a government incentive to encourage savings towards a child's future. Parents or guardians can open a Junior ISA with as little as £1 and manage the account on behalf of their children. But you must be aware that the money belongs to the child. Your child can then take control of their account when they turn 16, but the money cannot be withdrawn until their 18th birthday. Children aged 16 and 17 can open their own Junior ISA, as well as an adult cash ISA. When your child turns 18, the Junior ISA matures and the money is either sent to the child or transferred to an adult ISA. Your child needs to be under 18 and a resident of the UK for you to open an account for them. If your child lives outside the UK, you can still open an account if they depend on you to look after them, or you are a crown servant. For example, you serve in the UK Armed Forces. If your child moves abroad, you can still add cash to their Junior ISA. You cannot, however, have a Junior ISA and a child trust fund. If you want to open a Junior ISA, you will need to speak to your provider so that they transfer money to that ISA. In the 2020 to 2021 tax year, you can save up to £9,000 into a Junior ISA. This is not fixed and can change from tax year to tax year. Be aware that if you don't make use of your allowance, you cannot carry it to the next year. For example, if you put £8,000 in this tax year, you cannot carry the remaining £1,000 to the next tax year. Anyone can contribute to a Junior ISA, for example, grandparents and friends, which means more can be put in. There are two types of Junior ISA. First one is a cash Junior ISA, which earns interest and you don't have to pay tax on this. The second one is a stocks and shares or investment Junior ISA, where if you earn income in the form of dividends or capital gains when the value of the shares go up, you won't be taxed on this. Your child can have one or both types of Junior ISA. If you choose to have both, you can choose how to split the money. Just remember that the maximum you can have in both is £9,000 in the 2020 to 2021 tax year. As an example, if you have £5,000 in a Junior Cash ISA, you can have a maximum of £4,000 in a Junior Stocks and Shares ISA. The pros and cons of both ISAs. Firstly, cash ISA is low risk, and in turn, it has low returns as the interest rates tend to be low. With the stocks and shares ISA, there is more risk, but the returns tend to be higher. Investments in the stock market tend to return on average 5% after inflation, and you tend to see a growth in the long term, which is our aim, to invest over a long period. For the junior stocks and shares ISA, you could invest in individual shares like Greg's, Starbucks, Netflix shares, or in order to lower your risk, you can diversify and invest in trusts and funds which give you a balanced portfolio. I talk about funds in another video which is linked above and in the description, so you can watch and get a better understanding of funds. Therefore, choosing between a cash ISA and a stocks and shares ISA is down to your risk appetite. Let me know in the comments which type of ISA you would prefer and why. You can get a junior cash ISA from a range of banks such as Halifax, Nationwide, Barclays, and HSBC, and a junior investment ISA from a range of stockbrokers such as Vanguard, Hargreaves Lansdown, AJ Bell, and Fidelity. You can Google and find a variety of providers who offer junior ISAs. They will provide you with specific information on the ISAs that they offer. There are also comparison sites that you can check to show you which providers offer you the best rates to get the best return from your money invested. And you can then transfer from one provider to another. When you transfer, you have to transfer all the money. So you cannot have the same type of ISA with two different providers. For example, you cannot have a cash ISA with both Barclays and Nationwide in the same tax year. Something to note is that you cannot transfer money between a junior ISA and an adult ISA. There are two big disadvantages of a junior ISA that you need to be aware of. First, once you put your money into a junior ISA, you cannot access it until they're 18. So it's locked away, gone. Of course, this can also be an advantage as it avoids you from unnecessarily withdrawing money. Secondly, once the child is 18, they can do whatever they want with the money. I mean, whatever. So if they decided to use all the money to buy Haribo sweets, there's nothing you can do about it. Therefore, you need to be absolutely sure you want to go down this route. Will your child make a good financial decision with the money? There are other options such as children's savings accounts or saving into an adult ISA in your name. Of course, if you do this, it means you use the 20,000 allowance. However, you can then give the money to your child if you wish to and when you wish to do so. What are your thoughts on this? Do you think the junior ISAs are good or bad? Leave a comment below. I hope this video was useful. If you would like more videos on personal wealth, consider subscribing and turning on notifications. Until next time, keep working on your goals.